Reverse mortgages have certainly had their fair share of controversy over the years. Given its unique nature, its history, and its targeted demographic, it's understandable that reverse mortgages have been heavily scrutinized from their inception. However, this has also led to many common negative stigmas, misperceptions, and misunderstandings about the loan, leaving folks unsure of what to believe. What is fact and what is fiction when it comes to this complex financial product? So today, we are going to be exploring these common negative beliefs and we'll decipher where the truth lies or doesn't. So stick around for a while because chances are you yourself hold some of these beliefs, and I'm sure you'll want to find out what is fact and what is fiction. Hello, everyone. This is Taryn Proctor, your go-to reverse mortgage expert, coming to you with another reverse mortgage education video. If you are new to the channel, I am the founder of Retirement Home Equity Advisors. We are a mortgage brokerage specializing exclusively in reverse mortgage financing. So if your goal is to learn what you can about this product, you have certainly landed in the right spot. I create videos just like this often to help educate you about the ins and outs of this financial tool in an effort to make sure you are as informed as possible while exploring this option. So if you learned something valuable from today's video, please do me a huge favor and hit the like button below. This is super helpful for telling YouTube that this video is in fact informative and helps push it to more folks who may need it. Also, subscribe to my channel if you have not already. Subscribing is totally free and just gets you better access to my videos as they come out. And lastly, for the new viewers out there, be sure to check out the many other educational videos I have uploaded to my channel. There is a lot for you to learn over there, so feel free to take advantage of the abundant amount of information. And go ahead and leave me a comment below if there's a topic you'd like me to cover on a future video. All right. Here we go. So what are the most common negative stigmas or beliefs out there about reverse mortgages? And let's break them all down really quickly, and then we'll go into more detail about each one by one. And by the way, with some of these, there are some truth to them, so you'll want to certainly follow through as we go over all of these to ensure you are thoroughly educated on these topics. So number one is, the bank will own your home either when you enter into a reverse mortgage or at the end of the reverse mortgage. Number two, reverse mortgages are too expensive and are scams. Number three, reverse mortgages are only for those who are desperate. Number four, people lose their homes all the time because of reverse mortgages. And number five, the idea that you will be leaving your children or heirs with debt and no inheritance. So this first misconception about the bank owning your home at some point, I'm not actually sure where it came from. Maybe at some point there was a reverse mortgage type of loan offered where this was the case, but certainly for today's reverse mortgages, this is not true at all. When you enter into a reverse mortgage and throughout the life of the loan, you remain on title just as you would with a regular mortgage. The only time in which a lender can take ownership is through a foreclosure, which only happens if you do not keep up with your obligations of the mortgage. I did a video on this topic a while back, and I'll put a link to that video in the description below. So go ahead and check that out if you want to learn more about your obligations of this loan. Secondly, we have the idea that reverse mortgages are too expensive and are scams. And we'll tackle the scam part first. Now, the reverse mortgage we most commonly speak about, which makes up a majority of reverse mortgages in this country, is the federally insured reverse mortgage, or technically called the home equity conversion mortgage. And as I just described, this loan is insured and backed by the federal government, who also makes and enforces all of the regulations for this loan. Additionally, the reverse mortgage is probably one of the most, if not the most, highly regulated loans in this country, making it far from a scam. Now, that of course doesn't mean everyone is ecstatic about how this loan works. And some folks, once fully educated about the product, find it doesn't suit their needs. But just as any other product out there, as long as you are fully aware of and understand the implications of the product you are purchasing, then labeling it a scam is far from the truth. Now, with that said, there are times when people wind up entering into a reverse mortgage when they are not fully aware of and fully understanding of how the loan works and the implications. And that is very unfortunate. That is exactly why we have this channel and work really hard to thoroughly educate you about the ins and outs of reverse mortgages so that hopefully we can prevent this from continuing to happen. Now, as far as reverse mortgages being too expensive, this is a tough topic to address generally because although reverse mortgages do in fact have much more fees associated with the loan than, say, a conventional loan, they also have similar fees to some other types of federally backed or insured loans, like a regular FHA or VA loan. And it's a bit unfair to me to generally categorize this loan as being too expensive for everyone. Because if you think about it, for any product, whether it is too expensive or not, really depends on the individual's perception of the value that product brings to their life. Additionally, the phrase too expensive suggests we have something else to compare it to that's less expensive, which in the case of a reverse mortgage, there is nothing else out there like it that offers the same benefits. We just have no comparison. Therefore, whether a reverse mortgage is too expensive for you or not is something only you can determine from educating yourself on exactly what those costs would look like for you specifically, and then determining whether or not you feel the benefits the loan gives is worth the cost. Next up, we have the idea that reverse mortgages are only for those who are desperate. This could not be further from the truth. Even though a reverse mortgage can be a lifesaver for those who are desperate, the majority of reverse mortgage borrowers nowadays are utilizing this loan as a means of either improving their lifestyle or for financial planning purposes, or both. And we now know from research that the worst possible time to get a reverse mortgage is when you are desperate or when you are on your last leg. It's much better to set the loan up early to allow for better management of your finances throughout your retirement so that you never even have to worry about desperation. We are finding more and more through studies and research that if you implement your home equity as an additional piece of your broader retirement plan using a reverse mortgage, this gives you a much better statistical chance of financial success at the end of your retirement. And notice how I said piece, because the reverse mortgage is simply one piece of the puzzle, not the whole puzzle. Now, moving on to number 4, which are the stories about folks losing their home because of a reverse mortgage. Many of you, I'm sure, have heard of or seen or maybe even know someone who knows someone who had this happen to them. So I'm going to refer you back to that video I mentioned before about how the lender can foreclose on a reverse mortgage. The link is below in the description of this video. That video goes into a lot more detail than we are going to go over now on this topic. But yes, there are times when folks do get foreclosed on when they have reverse mortgages, just as they do when they have regular mortgages. And most often, when you hear or see these stories about someone losing their home to a reverse mortgage, it is due to either a lack of property charge payments, so property taxes or homeowners insurance, or they no longer live in the home, which is a requirement of this loan. Unfortunately, due to the target demographic of this loan, that makes it ripe for sensationalized stories in the press. So, can you lose your home because of a reverse mortgage? No, you can't. But you can lose your home if you do not keep up with your contractual obligations, which are simply maintaining payments to your property charges, taxes, insurance, HOA dues if you have them, maintaining the home to FHA standards, which basically means it needs to remain habitable and safe. And lastly, living in your home as your primary residence, which is generally described as living in the home at least 6 months and 1 day out of the year. And that is it. And lastly, this one is a biggie because, of course, leaving a legacy for our children or heirs is something we all want. But the idea that you automatically give that up when you get a reverse mortgage is certainly not the case. Now, of course, one of the major benefits of a reverse mortgage is that you do not have a required monthly payment on any money borrowed from the loan. And the result of this benefit is that when you don't make payments, the interest that your loan incurs gets added on to the loan balance over time. Therefore, you have an increasing balance over the course of your loan. And at some point, whatever that balance has grown to over time will have to get repaid in full. And it's because of this feature of the loan that many people believe you are giving up any sort of inheritance to your children. So the reality of the situation is this. When you enter into a reverse mortgage and you choose not to make payments, you will undoubtedly have less equity at the end of the loan than if you were to have stuck with your traditional mortgage with a forced payment, or if you stuck with having no mortgage at all. With that said, the way the federal government has this loan structured nowadays is done so with an emphasis and priority on making sure, the best that they can, that there is equity left at the end of the day for heirs. Additionally, you have a lot of control over how this plays out over time as well. For instance, you can choose to make payments towards the loan if you'd like. This comes with its own form of benefits and financial planning aspects as well. You can also structure your reverse mortgage in such a way that mitigates the interest the loan is incurring. So again, there are many ways to control this aspect of the loan to further ensure an inheritance to your children is still possible. Education is absolutely key here, as well as working with someone who also has these priorities in mind for you. Now, with all of that said, though, it is absolutely crucial to know and understand that even though it's likely that you will still have some equity left at the end of your reverse mortgage loan, there will always be some risk that you could become upside down on the loan, meaning you could wind up owing more on the reverse mortgage than your home is actually worth. And even though you, of course, have this same risk with any mortgage, the risk is greater with a reverse mortgage because you have no required payments and have an increasing balance as opposed to a decreasing one with a regular forward mortgage. However, this is exactly why this reverse mortgage is insured by the federal government. That is to protect you and your heirs if you do become upside down. This insurance gives you and your heirs the benefit of not being personally responsible or liable for any amounts of the loan that the sale of the home could not satisfy. And what that means is your children could never incur personal debt from this loan. Now, if you'd like to learn more details about the federal insurance of the loan, I'll put another link to a video I did on this topic in the description below. Be sure to watch that video as well, because there are a few more benefits this insurance gives borrowers, and the more you know about it, the better. Ultimately, as you can see, many of these negative stigmas and beliefs have a bit of truth to them, but for the most part are either false or are not properly contextualized. That's why it's so important to educate yourself on this product as much as you can and to work with someone you trust if you determine you want to investigate it further. So I hope you found this video helpful. And again, if you did, please give it a thumbs up and don't forget to subscribe to the channel. And if you have any questions about today's topic or about reverse mortgages in general, you can feel free to give me a call anytime. You can reach me at 888-982-0475. Thanks for watching, and I'll see you all soon.